One of the big questions people have about banking overseas is my money going to be safe? And so the framework those of us from the Western world have is my offshore bank deposit covered by the FDIC or by whatever my country's bank deposit guarantee scheme is? Now, the answer to that is no. Deposit guarantee schemes operate in their own country. The FDIC is not going to help you with a bank account somewhere else. But I'm going to talk about the bigger picture, how to make sure your money's protected, and what protections exist in this video. Hi, I'm Andrew Henderson, and every country has their own policy of what they do to protect depositors' money in the event of a bank failure. And so, as I said, FDIC coverage isn't going to help you somewhere else. Your country's deposit insurance covers your country. Not every country has a deposit insurance scheme, but here's how I look at it. Okay. If you're looking at this from a perspective of the libertarian take care of yourself approach, the free market approach, the idea of having the government insure your deposits doesn't really make a lot of sense. And so I'm going to go through some of the specific countries, but also go through why I really think that the onus is on the person who is putting their money offshore, the same way it should be on you if you're banking onshore, to make sure that you have a quality bank. Because quite frankly, some of the countries that don't have deposit schemes are actually good places to bank. So the Western world, pretty much everywhere has a scheme. So in the United States, the FDIC, it's now $250,000 that is insured. In Canada, I believe 100,000 Canadian dollars. In Australia, 250,000 Australian dollars. And everyone has their own exceptions and carve-outs and conditions and all those different things. In the EU, I think all the EU countries and NEEA, 100,000 euros. Okay, let's talk about some of the offshore jurisdictions. A place like Singapore, for example, they just raised their deposit insurance to 75,000 Singapore dollars. But there's a caveat, and that is that only money that is denominated in Singapore dollars will be insured. So if you go and open an account with OCBC in Singapore, and you put in 200,000 US dollars and that bank fails, you're not getting a penny. Their goal, and their stated goal, the SDIC, the stated goal actually makes sense. They say, we're here to protect small depositors. Small in Singapore is 75 grand. That's like the little guy. And so, if you're making currency speculation or, you're doing something that doesn't make you a small depositor who needs insurance, then we're not going to insure you. But what that does mean, if you're a foreigner and you go and open an account in Singapore and you put 75,000 Sing dollars in, not the world's worst currency by any means, but if you do that and the bank goes under, then you will get your money back. Here's what stands out to me about Singapore, though, particularly versus the United States. The United States, just on an ongoing basis, but particularly during the global recession, had a huge number of bank failures. The U.S. is like bank failure central. There are so many banks that every year some of them just go under. Whereas in many other countries, sometimes banks never go under. In parts of Europe, they haven't had a bank go under. They had one, like in World War II. And since then, it has, everything has just been fine. So to me, the quality of the bank is what matters, and the quality of the jurisdiction is what also matters. You want to have a good jurisdiction that's going to have strong requirements for their banks. This is why countries like Vanuatu, for example, have had so many problems, because anyone can go for $3 and get a banking license, and those banks not only don't work operationally, but you might not feel as comfortable with some of those banks where literally, I could go and start a bank there. So is the jurisdiction secure? Obviously, Singapore is a well-regarded jurisdiction. Hong Kong, all very, Switzerland, all very well regarded. Is the bank itself secure? Okay, that's really the question that I want to ask, and that may involve going through and looking at the financials of the bank. Is this bank well run? You can look at a list. There's a list put out every year of of the top 50 safest banks in the world. The Singaporean banks, the big three, are generally in the top 12 or so. They're all right there next to each other, 10, 11, 12, for example. And so the people who put that list out have done the homework and figured out, wow, these banks are actually being responsible with their money. On the contrast, there are, I believe, 0 U.S. retail banks on that list. There are a few U.S. banks. Maybe U.S. Bank itself was on the list one year. But any U.S. banks that are on there are generally not retail banks. Okay, so the quality of the institution is what matters. Okay, do I care as much about government insurance if I have a bank that is strong, has lots of capital, is being well managed, is in a jurisdiction that requires that? Am I really jumping to making sure my money is insured? The insurance is nice to have, but more important is this a bank that I'm intentionally choosing? I think that's the difference between being onshore, being in your home country, and choosing to go where you're treated best and bank offshore. Is there is a little bit of homework involved. There is some work to be intentional, whereas if I'm living in Phoenix, Arizona, I might just go to my local Chase Bank or my local Bank of America because I got a coupon for a free toaster if I open an account. And that's not very intentional. I'm just kind of wandering in like a zombie, like this is where I should bank. Whereas when you go offshore, you're going to make very intentional choices about what bank is best for my situation. Georgia, for example, they recently came out with a deposit insurance scheme. It covers all of 5,000 lari. It's less than 2,000 US dollars right now. So that's their version of small depositors. The people who are the pensioners, who are my neighbors in city center Tbilisi, who are 84 and get $100 a month. 5,000 lari to them is a lot of money, and that's who the scheme is trying to protect. They're certainly not trying to protect high-flying international investors and bank customers. So in the case of Georgia, the situation is, okay, let me look at TBC Bank, the largest bank. What is their situation? Do I feel comfortable with them? I've answered that and said, yes, I feel comfortable. But now here's where the caveat comes in on your personal level, which is why you need banking diversification. Again, there's a whole mindset shift from going onshore to going offshore. Not only that you have to be intentional, you can no longer be a zombie about it, but that you are going to not just keep all your money in one bank potentially. You might want a couple of different banks, not only for operational reasons, not only for having different currencies and protecting yourself in that way, but it might be nice to spread the money around so that you're protected. I don't want you to take your life savings and move it to one offshore bank. I don't care where it is. Now, I personally wouldn't keep my life savings in one bank in any country, even if that's the country that I'm from, that I live in. I just wouldn't do it, but many people do. And so I think that while we're being intentional about going offshore, while we're asking ourselves the question of how is my money insured, it's a perfect opportunity to say, okay, let me split the money up. If I've got a lot of cash, let me put some money here, some money here. Maybe I'll have more money in Singapore than I do in Georgia because I just feel that I feel more comfortable with it, but I like the benefits of Georgia as well. So I'm going to have a little bit of each. I think that's the question that you should be asking yourself, because most countries don't have that many bank failures. I don't want to tell you that it could never happen, but I'm telling you that you want to be responsible for finding high quality banks and for being intentional. If you do that, the deposit insurance suddenly becomes less necessary. Hi, I'm Andrew Henderson from Nomad Capitalist. I wrote this book, which you can find on Amazon, to distill a lot of the stuff we talk about in these videos and a lot of the stuff I've learned over the last decade plus traveling all around the world, teaching you about how to legally reduce your taxes, build your personal freedom, and create wealth faster. Definitely get a copy of this book if you want to learn more. Now, if you want to watch more videos, make sure you subscribe to our channel and make sure you click the notifications bell so you never miss one of our new videos with more tips on how to go where you're treated best. And if you're already a 6- or 7-figure entrepreneur and you'd like to put these strategies in place for yourself, go to nomadcapitalist.com and learn about how I can help you.